Well, even, characterizing it as a pullback, I mean, we're at 3,950 as we're talking. We've only pulled back from a level that we reached for a day, right? We had a quick move up, but the fact that we're just below 4,000 doesn't really feel like it's a pullback. It's only a pullback in relation to the fact that we almost hit 4,400, which was crazy in that it only took us maybe a week to get there from hitting 4,000. So if you throw that week or two out and just look at where we are, we've gone up a lot on the year. And I think sentiment, it's interesting how such a sharp decline can turn the sentiment to get everybody thinking that this is now potentially a bear market already in gold, and that there's a lot of downside risk. I think that's kind of what the market was trying to do in shaking out some of the newer entrants that may not really have the conviction, or maybe came in with some leverage and have been flushed out of the market. But we've created a lot more nervousness so that we can climb that wall of worry. And so as far as I'm concerned, if this is a correction, it's probably already over. I don't think there's that much downside in the price of gold from here. And the same thing with silver. I mean, silver didn't hold above 50, but it did take out 50, which is something it never did really in 1980 or 2011. We got almost to 55. And now we've had a pullback, but we're holding 48.50, which if you told people even a few months ago silver would be at 48.50, they wouldn't be, oh my God, it's pulling back. They'd be very happy that silver was at this price. And especially the gold miners. I mean, gold pulling back to 3,900 is great for all these gold mining companies. They're making a ton of money at $3,900 gold. They're making a lot of money at $2,900 gold. And that never really got factored into the price. I just think we're early in a broader bull market. I think that investors, mainstream Wall Street investors, both institutional and retail, are just finally noticing gold and deciding that they should make it a part of their portfolio. And this is after, gold is up 11, 12x this century. The Dow is down, close to 70% priced in gold since peaking in 1999. So gold has outperformed the markets, yet investors haven't even noticed that really until just recently. And I don't think that the fact that they've now decided that gold should be included in a portfolio, whereas before it had no place in a portfolio, I don't think that is going to change because, oh my God, now gold's 3,900 and not 4,300. I think you're going to start to see more accumulation of gold from investors who never bought any. And I think the central banks that have been the drivers for the past couple of years, I think they're actually going to pick up the pace of their gold buying. I think more central banks that weren't buying gold are now going to start buying as well. So I think there's a lot of new demand coming from gold, and I don't see a lot of new supply. I mean, there's some, but not nearly enough.
People who come to this event, people who are in gold, they're usually used to being the contrarian. So if they see the mainstream coming in, maybe they feel a little bit uncomfortable. So anything you'd say to those people?
Well, I think it's still contrarian in that now that the mainstream is dipping its toe in the water, it's still, a small percentage of mainstream investors. So I think we've got a ways to go before it's kind of a crowded trade. If you want to see, something that seems crowded or bubblicious, look at what happened in crypto. Look at the enthusiasm. This is, I think, the oldest gold conference. It's been going on for, 50 years, the Orleans conference. And there's more people here than last year, I think. But there's not 1,000 attendees. It's less. I forget, 600, 700. I was at the Bitcoin conference in Las Vegas over the summer. There were 35, 40,000 people who paid to attend. So we're nowhere near there. We don't have that kind of level of interest or enthusiasm. And when I was at that conference, nobody was worried about the Bitcoin price going down. I mean, everybody was 100% convinced it was going to 1 million or higher. But here, you get a lot of people at the gold conference. Well, they're nervous that we could get a pullback. They're not like crazy enthusiastic that we're going to be at $10,000, $20,000 gold next year. So, I think it's still early. The people in Bitcoin they're convinced that they're early. And I was trying to point out, well, you have 35,000 people at a conference. It's not early. I've been going to investment conferences. That's the biggest one I've ever been to. And so that shows you that, a lot of people are already involved. You're not getting in on the ground floor when the conference is that big.
People keep calling this a pullback, but let's take a breath and actually look at where we are. Gold is sitting around $3,950 as we speak. That's not a collapse. That's barely a correction. We had a short-lived spike toward $4,400 that lasted maybe a week, and now we're consolidating just below $4,000. That's not a bear market. That's not panic. That's noise. We've gone up massively this year, and what we're seeing now is simply the market taking a breather before the next leg higher. But it's amazing how fast sentiment flips. You get a 10% dip after a historic run, and suddenly the same people who were screaming new all-time highs are now convinced it's all over. That's what markets do. They shake out the tourists, the leveraged traders, and the nervous newcomers who don't really understand what they own. This little correction is the market's way of cleaning house. It flushes out the weak hands and resets the sentiment. And as far as I'm concerned, that's bullish. Because bull markets climb a wall of worry. And right now, we've got plenty of worry. Think about it. Gold has been the best performing major asset of the 21st century. It's up 11 or 12 times since 2000. Meanwhile, the Dow Jones, when priced in gold, is down around 70% from its 1999 peak. Yet for most of that time, gold was treated like a fringe investment. Wall Street laughed at it. The financial media ignored it. Your financial advisor told you to buy index funds and trust the Fed. And now, finally, mainstream investors are waking up. They're realizing that gold has been quietly outperforming everything they own for over 2 decades. So this notion that gold is topping out because it's down a few $100 from an all-time high is ridiculous. Pullbacks are not the end of bull markets. They're the pause that refreshes them. If anything, I think the correction is already over. I don't see much downside from here. The fundamentals haven't changed. They've only strengthened. Inflation is sticky, deficits are exploding, interest costs are spiraling, and central banks are trapped. You can't fix that with rate cuts, and you can't paper over it forever. Let's talk about silver for a second. Everyone's saying, oh, silver failed to hold $50. Okay, but it broke through $50, something it's never done before. Not in 1980, not in 2011. It hit almost $55 this time. That's huge. And now it's holding $48.50. Let's be honest. If you told anyone 6 months ago that silver would be near $49, they wouldn't be complaining about a pullback. They'd be celebrating. What we're seeing isn't weakness, it's consolidation after a historic breakout. The same goes for gold miners. These guys are making money hand over fist at these prices. You could drop gold $1,000 an ounce and they'd still be profitable. Most of them were profitable at $2,000. Now at $3,900, their margins are exploding. But the market hasn't priced that in yet. The mining sector is still trading like gold's at $1,800. That disconnect will correct itself, and when it does, the miners will catch up fast. We're in the early innings of a much broader bull market, one that will eventually draw in mainstream investors, institutions, and central banks alike. The irony is that while the mainstream is just beginning to discover gold, the smart money, the contrarians, have been here for years. And that's why I tell people, don't let the newcomers scare you off. Because yes, we are seeing new participation from institutions that used to dismiss gold entirely. You've got pension funds, family offices, and even some hedge funds that used to mock gold bugs now quietly adding exposure. And that's fine. That's healthy. The total allocation to gold across global portfolios is still tiny, maybe 1% or 2%. Compare that to equities or bonds, 40%, 50%, or more. We're nowhere near the saturation point. Gold is still the contrarian play precisely because so few people actually own it.
Yeah, well, we just got a rate cut by the Fed, and that didn't seem to be the trigger. I think we're going to get another rate cut, despite the fact that Powell kind of said it wasn't a lock. You know, the markets kind of priced it in, and he kind of pushed back against that. But at the end of the day, I think there's going to be another cut because I think the economic data